if you were just starting to get into Bitcoin today, how would you evaluate it as a financial opportunity?
It's been very difficult to find an investment that outperforms Bitcoin. And the one innovation in the space that we found is Strategy really fit that mold of blazing a trail. And most other companies just don't fit that profile. As far as what I'm most excited about right now in general, it's the Bitcoin treasury space as a whole.
Do you have a favorite Bitcoin treasury company right now?
I would say if there is a second best.
All right, Brian, welcome to the show. So great to have you on with us today.
Yeah, thanks for having me.
Of course, of course. I wanted to go ahead and kick things off with Strategy's 4242 plan announced in May, which aims to raise $42 billion in equity and $42 billion in fixed income by the end of 2027, I believe. What's your read on this?
I think the big thing that we were all looking forward to heading into the earnings call where it was announced was, are they going to re-up on the ATM? Because the plan was originally a 21-21 plan, but the 21 portion of that was the ATM has basically all been spent at this point. Opinions were split on that. Some people didn't want to see ATM. I tend to think those are more people who are just short-term traders of the stock. Long-term holders of the stock, I think, get the value proposition of the ATM, and so they were looking to see if that was going to re-up, and it was. On the fixed income side, they still have quite a bit of way to go. The 21 billion is not fully tapped, so upping that another 21 billion doesn't really create a lot of productive runway just yet. But we'll see how they're able to ramp their fixed income products. The recent earnings call talked a lot about their newer preferred stocks, Strike and Strife, and what I think they're really looking to do over the next year is to scale those products. One thing that we haven't seen them do yet is launch an ATM for the Strife product. We've seen a Strike ATM, a $21 billion Strike ATM. One thing that I think we might see in the next month or two is a $21 billion Strife ATM to match that.
Very interesting take. And so would you call yourself a short-term holder, long-term holder of Strategy, or somewhere in between?
I am primarily a long-term holder. I will occasionally take a short-term trade if I see a setup that looks very compelling. But in general, I try not to be in the short-term trading game. I try to be just directionally right over the medium to long term.
Yeah, makes sense. And so between the different tools that they have to access the capital markets, the ATM, which you talked a little bit about, convertible notes, Strife, and Strike, as a long-term holder, what's your preference in order in terms of having them? If you could have them use any at the most opportune time, what's your preference for them to tap into those different tools?
Sure. One of the interesting things they presented at the earning call was this new metric called BTC Torque, which basically shows how accretive the different instruments are under different circumstances. And what's interesting about it is I think it runs counter to a lot of expectations people have. I think a lot of people, they really want to see the convertible bonds issued. And they're a little bit skeptical about liabilities from the dividends on the preferred stock piling up because it's perpetual preferred stock. It doesn't expire. Those liabilities are permanent. But if you project out over the long run, say Bitcoin at a CAGR of 30%, which is Microstrategy's base case, an average CAGR of 30% over the next 21 years, that's compounding because it's compound annual growth rate. But the growth rate of the dividends on the preferred stock is not compounding. So if you're holding say you buy a $100 share of Strife, that's $10 per year dividend. It's the same $10 per year forever. That's not going to compound. So when you look at that over the long run, actually these preferred stocks actually do wind up being more accretive over the long run, given the base assumption of say 30% Bitcoin CAGR over the next 21 years. That said, when they're actually trying to issue these into the market, they can't just say, okay, Strife, that's our most accretive option. Let's go hammer that. The ability to issue these into the market depends a lot on market circumstances. And when we have situations where we have, say, a big BTC run-up, volatility spikes, implied volatility is just through the charts, that's an opportune time for them to issue a convertible bond. But when we have these long periods of sideways chop, and implied volatility is very low and realized volatility is fairly low, they can't issue these convertible bonds because the market conditions just aren't there to issue them. So for the preferred stock, it's more about, they're more influenced by interest rates. Let's say we have a very low interest rate environment. Suddenly these instruments become a little bit more compelling to issue, because right now, SOFR plus say 6%, if that's 10%, that's not as interesting as SOFR plus 6% when, that's 2% with a 6% spread. So I think it really just depends on the market circumstances, which one of these they're actually going to be able to use at any given time. And having more tools in the toolkit gives them a lot more flexibility to fundraise, no matter what market conditions we're in.
Yeah, so depending on market conditions, we'll continue to likely see a mix of these different tools used to optimize the strategy. But wanted to move on a little bit here. I saw you recently tweet about a new company that's entered into this space, GameStop. But your tweet was kind of about letting GameStop go. I think you said, "Goodbye, GameStop." You closed your position, and that, a company that's going to run this strategy and playbook needs to have commitment, consistency, transparency. And I'm curious, as you, think about GameStop and, their announcement to actually go purchase some Bitcoin, but now they've sort of had some lag here, which has caused some frustration. What do you think is holding the company back at this point, and why do you think GameStop hasn't lived up to its potential in this space so far?
Sure. There are a number of different things it could be. I think one thing that we don't really have insight into is what conversations are happening behind the scenes. One of the biggest difficulties that any of these Bitcoin treasury companies has in getting their strategy off the ground is getting board alignment. And so we've seen indications that they want to move in this direction. Bitcoin was all over the recent 10K filing. So the groundwork is laid for them to do it, but what we really don't know is behind the scenes how much alignment there is on the board to do it, how much conviction there is to do the strategy. If they're doing it, I'm not a specialist in the GameStop stock, but what people have overwhelmingly told me in the past few days is that Ryan Cohen tends to be very guarded, play his cards close to his chest, and typically only speaks once a year at their annual shareholder meeting. So it could be the case that they have already bought Bitcoin and they just haven't announced it yet, or they could be DCing it into the back end and that we just don't find out until the annual shareholder meeting. However, just because that's his style, that's the way he goes about things, I don't necessarily think that means it's going to be successful in the Bitcoin treasury space. Like I said in my post, I think that the transparency, the commitment, the consistency, I think all these things are really what investors look for, especially when we have 10 different companies trying to do the same strategy. The ones that I think are really going to stick out are the ones that are most reliable and the ones that are most consistent and the most transparent.
No, makes sense. And just stepping back a little bit, Strategy started this their Bitcoin standard era in 2020, and it took nearly 4 years for us to see a true copycat, ones that actually were committed to that consistency and transparency as well. But why do you think it took 4 years for that to happen? What do you think finally changed, given that Strategy was performing really well, and so was Bitcoin at the time?
Sure. The lens I like to look at this through is the technology adoption curve. And there's this idea of crossing the chasm. And so you've got these different buckets of adopters. You've got the very, very early people, the innovators, the early adopters, the early majority. And the gap between the early adopters and the early majority, that's the so-called chasm. So that's the jump between the small 10 to 15% of the population and the big meat of the center of the bell curve. And so I think when the strategy first came on the scene, people really misidentified what was going on. They thought, okay, corporate America is here. We're going to start seeing, just tons of these spring up overnight. And that really wasn't the case. Strategy really fit that mold of an early adopter that was okay with taking potentially some of the arrows in the back to get the strategy started. They're there to be early and comfortable there being early, being an iconoclast, comfortable blazing a trail. And most other companies just don't fit that profile. And so I think that's why we took it so long, is it took 4 years for that to prove out. We had to go through a Bitcoin winter. Nobody was going to start this strategy in the middle of a Bitcoin winter. But when we saw Bitcoin start to come back again, then I think that was really the time when people saw, okay, yeah, you can do the strategy, you can survive a deep, deep bear market, still come out the other side smelling like a rose. And now we're seeing really a proliferation of these companies. I think we're seeing that crossing the chasm moment where you've got those early majority players who really just want to see the model already proved out and not feel like they're taking such a big risk.
Yeah, and in late 2024, Strategy's early move here did pay off very well with an inclusion into the Nasdaq 100. A while back, people were projecting huge price moves based on a large multiplier effect on inflows resulting from Strategy's inclusion into the Nasdaq 100. And now we've seen similar talk about a potential S&P 500 inclusion. Some are even comparing this to Tesla's 2020 inclusion into the S&P, where the stock jumped nearly 40% in about a month after the announcement of its inclusion and continued to go on a massive run throughout 2021. Do you see any merit in that comparison, or will this feel more like the QQQ moment where there was a lot of hype beforehand and around the time it actually happens, there's actually limited impact on the stock beyond that?
Sure. And I think that one thing that's important to realize is that when these companies join the indices, typically the majority of the move happens before they join the industry or before they join the index. And so I think that is part of what happened when they joined QQQ, was that we saw the move happen almost a month before that. And it was also tied in with, the Trump pump from the election. And we had, a blow off top. Price went absolutely crazy. But if you unwind and peel it back, price was still up pretty significantly compared to, say, a month prior to the election versus the time when it joined QQQ. I think there was still a lift from that. It's just that we had that blow-off top in the middle that kind of masked it. And I think in terms of joining the S&P 500, I think we'll see a much bigger move off of that. If, in fact, that's what happens, I think we'll see a much bigger move. S&P is much, much bigger. I think it's 6 to 10 times bigger than the QQQ. And that will be happening pretty soon, potentially. Bitcoin right now is already back to the prices that Strategy needs to at least qualify for the S&P 500. If we can just close the second quarter, above, I think the mark right now is around 95K Bitcoin. If we can close the quarter above that mark, that qualify, we'll see the front running start right away. They wouldn't be eligible for joining the index until September. But as soon as people know they're eligible to qualify, they're not going to wait till September before they start buying. They're going to start buying right away. And so that is really what I'm looking forward to, looking toward the end of the second quarter close. And I think that, if we hit the mark, we're going to see some fireworks, especially if Bitcoin does Bitcoin things. If Bitcoin is at, let's say, not just 95K, but 120K, 150K, then I think it's really going to go nuts.
Yeah, no, great point there. An important distinction that the run-up typically happens before, because I know there were a lot of people waiting for that run-up to happen or continue afterwards, and we're kind of waiting for some large flows there, but that didn't quite pan out. But great distinction there. I wanted to shift gears a little bit into your mental framework. I'd like to explore how you approach Bitcoin and these treasury plays from a first principle lens as part of our first principles section here. So just starting off, if you were just starting to get into Bitcoin today, how would you evaluate it as a financial opportunity using a first principles approach?
Well, the first question I would always ask is, do I actually believe in the future of this thing? I would never buy an asset just because I did some numbers on a spreadsheet and I thought that there's a compelling case for a pop in 6 months. That's not something I'm interested in. And I think the case for Bitcoin is digital hard money. Do you think that governments around the world will continue to print more and more money? Do you think M2 is going to continue to go up over time? Or are governments going to suddenly become fiscally responsible and reduce the money supply? Personally, I don't think that's going to happen. I think it's going to keep going up exponentially like it always has done. So as long as those conditions persist, the value proposition for Bitcoin is very clear to me. Now, moving on to Bitcoin treasury companies, it's been very difficult to find an investment that outperforms Bitcoin. And the one innovation in the space that we found is companies that put Bitcoin on their balance sheet and then buy more of it. Because what's worth more than Bitcoin is more Bitcoin, right? So in evaluating these companies, I think it's a matter of looking at the teams. Do I trust leadership? Do I trust management? Do I think that they're capable of executing on strategy? Do they have an underlying business that throws off cash that they can use to funnel into Bitcoin buys? What is the health of that business? Does it have good prospects? Does it not? Now, one of the things we're seeing come up now is companies that are marketing themselves more as pure plays, like the new Cantor Equity Partners 21 play that just came out. They are marketing themselves as a pure play. I don't think it's really going to be 100% pure play. I think there will be a business behind that. They've hinted at things like Bitcoin services and products. It remains to be seen what exactly that is going to be. But the more cash flow that you have, obviously the more Bitcoin you can buy, and not even necessarily directly with buying cash directly from income, but using that to service debt, to leverage up, as Strategy has done. Most of their loans that they've taken on, their convertible debt, is basically like an interest-only loan that you pay back by issuing shares. And so that gives you a little bit more leverage on an operating company that couldn't just, say, settle the debt outright with cash. So these are some of the things I look at. And to just recap that, 1, Bitcoin, do you believe in digital hard money? Okay, first checkbox. If you don't, then you're not going to invest in Bitcoin treasury companies. And then 2, if you're going to look at Bitcoin treasury companies, do you believe that increasing Bitcoin per share is a trade-off that you're willing to make for, say, having Bitcoin cold storage, where nobody can take it from you and there's no operational risk and no counterparty risk? Personally, I don't think that Bitcoin was intended to end investing. I think investing is still going to be a thing long after Bitcoin, just as it was a thing long before Bitcoin. So I'm interested in these Bitcoin treasury companies as a way to increase my own Bitcoin exposure without having to do it myself, with going out and taking leverage and doing things like issuing a convertible bond that I just can't do as an individual.
Yeah, and can you talk through that in terms of the leverage here? Again, from a first principles perspective, why does it make sense for anyone, an individual, a company, a sovereign, to actually borrow fiat to go buy Bitcoin? Under what conditions does that strategy actually make sense, and what do the debt terms need to look like?
Fundamentally, it's an arbitrage against appreciation of the dollar and the nominal interest rate that you're able to get on it versus the appreciation of Bitcoin. Because let's say you have your dollar, or I'm just going to use dollar as a substitute for fiat because I don't like saying fiat. But so let's say you've got treasuries that are paying 5% per year, ostensibly, but also potentially having negative real yields if inflation's higher than that. But then you've got Bitcoin, which has had a historical CAGR of anywhere in the 50 to 60%. Some years much higher than that. Probably will trend slightly lower over time as it matures. But if on the one hand you've got an asset that has an annual return of, say, 30 to 50% versus cash where you can get 5% nominal yield maybe, then just by borrowing money and putting that in Bitcoin, you've got a spread of 25, 45% that you can earn per year.
And do you think there are any different considerations that an individual company or sovereign might take when deciding to actually buy Bitcoin?
Yeah, the other thing that anyone has to watch out for if they're borrowing to buy Bitcoin, if they're taking leverage to buy Bitcoin, is volatility, right? When you buy a house and you put down 20% down payment and you owe 80%, that's like a 500% leverage ratio. If you're that levered on Bitcoin, tiny move can wreck you. But a company like Strategy, they're targeting a 20 to 30% leverage ratio. They can stomach potentially 80 to 70% drawdown in Bitcoin and still come out the other side as long as Bitcoin comes back. So that leverage ratio is one thing you really have to pay attention to. It's just how levered you are. Another thing is, how are you going to get access to this debt? If you're just an individual, are you going to use a credit card that has a 20% APR on it? That might not really be the best way to borrow. Are you going to use a home equity loan with, say, 7%? That's a little better. A lot of people a few years ago basically took all the equity out of their homes at 3%. People who did that and parked their equity, parked the cash they took out of their home equity into Bitcoin are very happy now. Now, I personally would not recommend mortgaging your house and buying Bitcoin. I think it's a very risky thing to do. But if you're a corporation, you've got very different avenues available to you. Strategy goes out and issues a convertible bond. They can borrow at 0%, and they can print new shares to pay it back. They don't even have to make any cash. They can just print new shares. And as long as they're able to issue these shares at a premium to the Bitcoin value that it represents, to the underlying Bitcoin value of these shares, they come out ahead. So let's say on a per share basis, there's 50 cents of Bitcoin. If you divide the Bitcoin value of the company divided by shares, let's say that's 50 cents per share. if you're able to go out into the market and issue a convertible bond and effectively get, let's say, $3 per share or $2 per share, then you're able to buy $2 worth of Bitcoin for 50% worth of exposure, and you're able to capture the spread of, say, $1.50. That's a very good deal. If I could do that, I would do that all day long, or at least up until I was 20% levered.
Yeah, it makes sense. And finally, for this section, how did Bitcoin or learning about Bitcoin change the way you approach investing in general as part of your own journey?
Sure. I think probably the biggest fundamental change is that Bitcoin became my new hurdle rate. I think pretty much anyone who's picked up a personal finance book in the past 20 to 25 years has read the same strategy. They've read things like most traders can't beat the market. Most assets don't beat the market. The safest thing for most people to do is just DCA into the S&P 500 index over a lifetime. And that's one way to do it. But I think that way of thinking is eventually going to get replaced by people just saving in Bitcoin. Because a lot of what people do for investing is not really investing. It's an attempt at saving. They don't really have a good way to save. Their money is depreciating. It's a melting ice cube. They've got to stick it somewhere. They don't know what to do with it. They're not professional money managers. So they stick it in the S&P 500 index because that's what the personal finance book said to do. And I think that could change over time where we see people just saving in Bitcoin. And they don't have to worry about the risks that come with owning a portfolio of equities that they know nothing about. So yeah, that's the first big thing, is that for me, it's the new hurdle rate. I think it's going to be the new benchmark that eventually replaces the S&P 500. And also, when looking at these Bitcoin treasury companies, I think it gives a metric to measure against that people didn't really have before, right? If I'm going to buy a strategy, my benchmark is Bitcoin. It's very easy to compare. Did it outperform Bitcoin or not? And it's not really something that people are used to looking at with, say, like NVIDIA. If you're going to buy NVIDIA, what's the Bitcoin-like comparison there? Is it like an index of AI companies? Is it? There's no real straightforward comparison. You can kind of compare it to the S&P 500. You compare it to market indices, but it's not quite the same clear comparison. So I think that's very interesting. We've got a very clear benchmark to measure all other investments against.
Yeah, perhaps if more and more people start to look at Bitcoin as the hurdle rate or the benchmark, then that might be one of the catalysts that pushes more of these companies, particularly the big tech companies, to maybe have to acquire some Bitcoin to put on their balance sheet, right? So that they remain competitive from a stock appreciation or stock performance standpoint.
Right. Well, the other thing that we're going to have to think about is, let's say on the one hand, you can invest in an asset with a 30% CAGR, or you can invest in a new line of business. If that new line of business, if the expected return on that is 15% per year, you're better off not doing that and just putting the investment into Bitcoin from a pure returns perspective. There might be other reasons why you want to build up this new line of business, but it provides a new hurdle rate, not just for capital investments, but also for business investments. Do I want to go out and start my own business? Do I want to buy, let's say, real estate and have all the hassle that comes with that, or do I just want to park my money in Bitcoin?
That makes sense for sure. Yeah, we'd hope that'd be the case with financial assets to really give people options, flexibility to do what makes sense for them and their family and their futures. Wanted to move on here a bit and focus on providing a bit more alpha for our listeners. We talked a little bit about some of the strategies, new KPIs. I think you mentioned BTC Torque, which they recently introduced. Over the past year, Strategy has introduced several new business KPIs. Initially, BTC per share and BTC gain, as well as several other new ones on their most recent earnings call. Are there any new ones from the earnings call that really stuck out to you? And which KPIs do you think are most useful for evaluating the business and explaining its performance?
Well, if you're going to invest in a Bitcoin treasury company, I think one equation that everyone should be familiar with is Bitcoin per share times MNAV. Because that really is the benchmark for whether or not you outperform Bitcoin or not. If Bitcoin per share times MNAV is higher when you bought it, or the other way around, is higher when you sell it than when you bought it, then you outperform Bitcoin. If it's not, then you didn't. It's very simple. So one, be familiar with that. In terms of the new metrics that were introduced, I think the two that are really going to be good to pay attention to are BTC torque and the BTC credit rating. A BTC torque is important because it really highlights how creative the different instruments are under different market conditions. And they've got these really beautiful charts that show that basically Strife is basically the apex predator of all the instruments they have right now. And depending on your assumptions about MNAV and Bitcoin CAGR, the other instruments actually vary quite a bit in how accretive they are in comparison. So I think that is something that would be good for people to really wrap their brains around and to think about as they look at how market conditions change over time, which one of these instruments are going to be good to issue. And if you're really trying to forecast what MicroStrategy is going to do, to really think about, okay, we're in a high volatility scenario. Maybe they're going to issue some convertible bonds. Okay, we're having an MNAV blow off top here. Maybe this is a situation where we're going to see a lot of ATM to capture some of that premium into permanent capital that they can use as a base to leverage up against later. So I think BTC torque and just thinking about those market conditions is going to be really important. The second one that they spent a lot of time talking about was BTC credit rating. And I think that is going to be less important for, let's say, the retail investor to think about. It's something that's going to be more important on the back end for them when they're trying to issue their fixed income securities. Because right now, one of the things that's different about Strategy is they are heavily over collateralized. When you have a 20% leverage ratio, that means you've got, let's say, 4-to-1 ratio of assets to liabilities. It's a very different scenario than if you are, say, buying real estate and you're leveraged the other way, where you've got 20% down, you've got an 80% leverage ratio. It's a very different scenario. And so when you think about the credit worthiness of companies in these different situations, Strategy ought to be getting more credit for having this heavily over-collateralized position than they are. They should be getting smaller credit spreads than they have. And what they would really like to do is go out and talk to these credit rating agencies, talk to the companies that they're issuing these fixed instruments to, and to really have them take that more into consideration and say, hey, this is actually very low-risk debt. You should be wanting to take a lot more of this and at a much smaller spread. And they've got some selling work to do that. They've got some marketing and sales work to do to really, I think, communicate that and to convince the market that's true. I think it's true. I think they're right about it. And if they're successful with that, that is really what is going to fuel the next leg up for them. If they really want to capture 1% of the $300 trillion fixed income market, get to a point where they're raising $3 trillion, that is really, I think, where they need to put their time and effort. They see that. It makes sense to me. And I think that is exactly what they should be doing and where they're going.
No, wonderful, wonderful. Really good points on that. I think it's really interesting, especially around the BTC credit, right? So, as you mentioned, their leverage ratio, the ratio there is like 4-to-1, their assets relative to the debt. If you think about a lot of private equity companies that are in, this traditional finance space, when they go out and do acquisitions or do projects or investments, there's a lot more leveraged use there, right? But I think it's, we still have a lot of people in traditional finance when they look at something like a MicroStrategy or hear even the name Bitcoin or the word Bitcoin, that kind of scares them away. They think there's way too much debt there. They don't really understand how Strategy is managing this. So I still think there's a lot of education that needs to be done there, and also therefore a lot of opportunity once the market starts to understand and digest this and actually give Strategy credit for what they've been able to build here and how they're managing their risk and their debt.
Yeah, absolutely.
Yeah. Just moving on here a bit now, we could, maybe stick to the topic of debt and convertible notes, because I've seen some of your breakdowns of Strategy's convertible notes, and it's incredibly detailed, your work there. From what I understand, you don't come from a professional finance background. So how did you build those skills, and what would you recommend for someone who wants to go deeper into the financial and technical analysis side to better understand companies like Strategy?
My background is actually on the marketing side. I come from a background of marketing and financial products. And so when I first started researching MicroStrategy, I didn't know what a convertible bond was. I was in the position that most people are in when they first come to the company. They hear, oh, the company's got a bunch of debt. that they use to buy Bitcoin. Well, how does that work? And it really just took a lot of reading over time. I read through all the convertible bond issue announcements, and I made a big spreadsheet where I basically plotted every buy that they ever did, and I factored in the dilution, the assumed dilution from the convertible bond notes to look at how the Bitcoin per share changed over time. And one of my favorite metrics to look at is the number of shares to represent one Bitcoin worth of ownership. It's one of my favorite metrics. So basically, I just plotted this out because I really wanted to see for myself that, okay, they're diluting the shares, but am I coming out ahead on this or not? And yeah, you are, because basically everything they do amounts to some flavor of issuing shares at a premium to capture the premium to increase the Bitcoin per share. So, in terms of what you can do to get up to speed, I think, for one, go to Microstrategy, investor relations section, and just read the announcements. Go on to AI. If you don't really understand what a convertible bond is, go and start asking questions. Go to Investopedia, look things up. Find people to follow on Twitter who explain these things. My Twitter basically is aimed at retail investors. One of the reasons why I started in the first place was just as a venue for me to kind of think through these issues, write them up and share them, and in the hopes that other people would find them valuable. And if not, at least it was still productive for me to just think through the issue and try to, put words to paper. Anything else interesting you'd like to know about that?
Yeah, no, I think that's super helpful. So, looking on the strategies, investor relations page, right? Taking some of that information, putting it into a spreadsheet, trying to practice plotting these, different things to better understand the company. And I think another key point you mentioned there too is sharing out your ideas, right? If you commit to something like that, kind of a nice check for you to actually stay committed to that. And like you said, the downside case is that no one else looks at it, but at least you did it and, you learned something. But I think luckily for you, your material's been very good. And so it's captured the attention of quite a few people. So, happy to move on here. So, previously you mentioned the partnerships between Cantor Equity Partners, SoftBank, Tether, and Jack Mallers, which is, their aim is to form 21 Capital. Jack Mallers, he's an OG in the Bitcoin space, also the CEO of Strike, and lives on the Bitcoin standard as an individual himself. And they've all recently partnered to create a new Bitcoin treasury company with Mallers as CEO. Seems like a great collaboration, maybe an all-star-like team, but quite a bit of dilution given the structure of the deal with investors. However, the market doesn't seem to care, seems to have confidence in the deal, and I think the stock is up over 5x in the last 2 weeks since the announcement. What are your thoughts on this situation, and are you a buyer of Cantor Equity Partners?
At these prices, I am not a buyer. If you bought the open at $10 or wherever it was, and you're sitting at, I think it was in the $50 range today, you're very happy. It's tough for me, these prices. Even at the open, there's a lot of risk that sometimes SPACs don't close. I don't think that is actually going to be the case here because the people behind it are all very serious and committed. But to me, it's a little bit in meme stock territory right now. I mean, I definitely hope that they're very successful, but it's difficult for me to justify prices where they are right now based on plausible returns I could see over the next year or two. How far away are they from even being able to execute? How far away are they from being able to issue, say, a convertible bond or to add more Bitcoin to the balance sheet? We don't even really know what underlying business they're going to use to fuel this. There are a lot of unanswered questions. So, given the team behind it, I have to think that the plan will be good and that they will execute it well. But right now, just there are so many unknowns that I have to look at it kind of like a meme stock. And I think we've seen this pattern play out before when new Bitcoin treasury companies came to market. To me, it's almost reminiscent of the ICO boom and the NFT craze in some ways that people just, oh, there's a new one, let's go jump in, and then try to jump out before the price craters. So, over the long term, I don't think it's going to be a scenario like that where just, there's a flash in the pan, it's gone. I think probably we'll see the price come down as it cools off a little bit. And then once they actually get started, once they start building up the Bitcoin in the balance sheet, once they start issuing their fixed income instruments, I think we'll start seeing that grow again. Right now, I think we're in the gambling phase, and we're not really quite to the stage where there's any kind of numbers or anything to use to kind of reason about what the investment case actually looks like.
Yeah, to your point, I think we also saw this boom bust cycle in 2020, 2021 with SPACs specifically. But to something you mentioned earlier, it's really about, I think, with these Bitcoin treasury companies, that consistency and transparency. And to your point, there are a lot of unanswered questions as of now, but they only announced 2 weeks, so time will tell on that one.
Yeah, absolutely. I mean, we can give them more than 2 weeks to
Right,
tell us what's going on.
Exactly. But let's move on to some rapid fire questions to wrap things up here. We'll keep it short and sweet. So, what are you most excited about right now for both Bitcoin and strategy?
Well, I think as far as what I'm most excited about right now in general, it's the Bitcoin treasury space as a whole. I think the top adoption story right now is Bitcoin treasuries. And it's really, the push into corporate America where they're adding Bitcoin to their balance sheets, levering up to buy it, doing all these things to get as much Bitcoin as they possibly can. I think that really is the story right now. If the strategic Bitcoin reserve comes through, I'm skeptical that will really be done in as aggressive as a manner as people had hoped for. But if it does, that would be pretty good for price, I would have to imagine. But I have remained steadfast that I think more so than the government adoption story, right now the adoption story is the corporate adoption story. Yeah, and basically that's where all my focus is right now. So when I launched my Twitter, I didn't really intend to be a Bitcoin treasury company specialist, but that's where the story was. So that's what I focused on. If the adoption story migrates elsewhere, if something else looks super promising, I'll start covering that more. But right now, I think that's where the excitement is.
Wonderful. And excluding strategy, do you have a favorite Bitcoin treasury company right now, and why?
I would say if there is a second best, we're saying there's no second best, but if there was a second best, I think right now I'm most excited about Metaplanet. And they've got a very unique position because one, they're operating in Japan in a situation where they have no other domestic Bitcoin proxies. They've got a tax advantage. The capital gains tax on Bitcoin in Japan is 55%, we're the highest in the world, but the capital gains tax on equities is only 20%. So if you're just thinking about it from a tax perspective, it's much more advantageous to own Bitcoin or to own a Bitcoin proxy, a corporate Bitcoin proxy. And they can also, and one other thing they can do with, the average Japanese retail investor could do with an equity that they can't do with Bitcoin is trade it in something that's called a NISA account, which is something akin to an IRA account or a 401k like we have in America that you can trade tax-free within the account before you withdraw it. So they just have this really unique setup over there that they're able to capture one large captive market share. Japan also has some of the cheapest financing in the world. Even companies that have basically zero volatility can still get 0% convertible bonds. So it's just a really unique set of circumstances that I think will allow them to have a really great growth story. And more broadly, I think we've seen a lot of these companies start up in the United States, but these international companies, I think, is really going to be an interesting growth story to follow. There's another one started up in Hong Kong called HK Asia Holdings, aka Moon Inc. And I know that there are more that people are working on starting in other foreign markets. And I think that it's going to be great not only for providing options for Bitcoin treasury company investors, but also for Bitcoin, because it's going to allow different pools of trapped capital to onboard to Bitcoin that might not be able to access it otherwise. Huge fan of strategy, but there are pools of capital that even they can't access. If there's pools of capital that Bitcoin can't access, that strategy can, there's another bigger pool of global capital that strategy can't access, these local players are going to be able to. And that's really going to help onboard the rest of the financial apparatus to Bitcoin. I think it's super positive.
Makes a lot of sense. And funny you mentioned Metaplanet there. They are a Japanese company, as you talked about, and they tweet their press releases in Japanese. I was just wondering, does your degree in Japanese help when evaluating the company at all?
Yes and no. Because there's speaking Japanese at an everyday level, and being able to read a newspaper, and then there's reading a corporate balance sheet. It takes a whole different vocabulary to really to pierce the veil on what's going on with the financial lingo. And they publish most of their announcements in English as well. Like most of the documentation goes up both in English and Japanese. So frankly, I just read the English documentation because it saves me a lot of time.
Wonderful. I'd probably do the same if I could read both, and if I were more proficient in English. To wrap up our rapid fire here, wanted to touch on Semler Scientific. They were the second company in the U.S. to start a Bitcoin treasury strategy. But for whatever reason, they've had a run up at some point, but overall, it hasn't lived up to its potential quite yet. And I'm just curious, from your perspective, do you think Semler Scientific will get back to a 2x MNAV this year? And what would need to happen for this to play out?
It's definitely possible. I think they've had a couple of headwinds. One thing that's important to note about them before I talk about the headwinds is that they're actually more levered than Strategy is. I'm not sure what the leverage ratio is off the top of my head, but it's higher than Strategy. And they're also in that an average higher cost basis because they were later to the game. So that is hurting their valuation right now because they're when Bitcoin goes down and you're levered and you've got a high cost basis, that hurts you more than when you're less levered and have a lower cost basis. So that has been a challenge for them. But they've had other headwinds. The details I can't speak to that well of what exactly the case was about, but basically they had an issue where they have to pay a $30 million settlement because of some regulatory hiccups around the way one of their products was marketed. I think maybe not even necessarily entirely their fault, but one of their distributors. Again, not super deep on the details in that case, but having that $30 million judgment they have to pay is a pretty big overhang, and I think it's still weighing pretty heavily on the stock. But just the fact that whole judicial process is wrapped up, and we know specifically what the settlement is, and the settlement has been done, allows them to move on. They've started buying Bitcoin again. If we have another run up in Bitcoin, if Bitcoin goes up to, say, 150, 200K this year, then yeah, I think they could get back to 2x MNAV, maybe higher. I think they could still do quite well. But in the short term, we've still got these headwinds from just different things that have happened over the past few months.
Yeah, makes sense. And to close us out here, Brian, what are you currently reading, listening to, or learning about that's inspiring or influencing you?
What am I currently reading and listening to? I might have to think about an answer for that one for a second.
Or learning about if there's a new area.
Well, I'm always learning all the time. Okay, so one of the things that I'm really learning more about right now is just how the Japanese fixed income market works, how the different instruments available to Metaplanet work, because it's not quite the same there. In the United States, we have this ATM that Strategy can tap into to basically issue shares whenever they want to, but they don't have an ATM in Japan. Metaplanet has come up with this workaround with these things called moving strike warrants. I can't fully explain all the mechanics, but that's one of the things I'm reading about right now, really trying to wrap my head around that. It's a little bit more complicated of a setup, but it approximately allows them to do kind of what the ATM allows Strategy to do.
That's super interesting. I was not expecting you to go there. How are you even getting up to speed to that? Because I imagine that, like you'd have to really go searching for, to kind of figure that out yourself. I doubt there's a lot of already made material out there on that.
Well, one of the starting points is looking at their investor relations material to see what actually it is they have outstanding. And then, this is kind of the approach I took when I was first researching all the different things that Strategy was doing, was go look at the investor relations material, see what strategies they're applying, see what kind of instruments they actually have outstanding, and then just go out and, go on Google, search for it, see what, the different investments websites say, go on to YouTube, look for videos of people explaining it, go on to AI chats and really dig deep down into questions that I have. I think one of the things that is beneficial for anyone learning anything is when there's this little piece here, you feel like you've kind of got it, but there's this little piece here that you feel like you don't quite get, is to really push on that and keep pushing on it all the way down until you've got it. And so it's not quite as straightforward as just, I found this book and I read it and now I got it. It's go out, find all the resources I can find, read them all, look for any little point that I don't quite understand, and just keep going, keep pushing on every little thread until I feel like I understand how it works all the way down.
You're talking about achieving greatness there, Brian. I love it. I love the mentality. And then finally, where can people continue to follow your journey and stay up to date with all the work that you're doing?
Yep. So if you would like to see my work or just get in touch with me, I am Bitcoin Overflow on Twitter. It's BTC_overflow. And that is the only place I'm active on social media. So if you'd like to connect with me, that's where I am.
All right. Thanks for the great conversation today, Brian. Really appreciate you joining us. Take care.
Thanks for having me on the show.